For more on this, we're joined by Vicky Pryce. She's Chief Economic Advisor at the Centre for Economics and Business Research. Hi there, Vicky. Now, rising costs have had ordinary citizens, with half of American families unable to cover the basic necessities, which was the complete opposite of Trump's election campaign. So is this purely an inflation-driven crisis or a much deeper structural one?
I think the inflation figures matter, and as you know, we've just had the latest personal consumption expenditure price index, which was slightly higher year on year than had been anticipated, at 3.7%. The interesting thing is that underneath all that, despite everything that you've just been talking about, real disposable incomes seem to be doing okay for the time being. But I think you're right that there is a feeling of malaise, if you like. So what's happening is that consumer confidence is really quite low and consumer spending intentions are quite low. That is, of course, because I think people are anticipating that there will be further price increases that perhaps their wages are not going to meet in the future. And we've seen the jobs market being reasonably sort of quiet by comparison to where perhaps it could have been at this time of the year. So there is concern. But if you add to that, of course, the drought and everything that's been happening on the food prices front, there is a bit of concern among consumers and, of course, voters. And again, you're quite right to say that in terms of industry and in terms of the regions and the states across the US, what you have is quite a different pattern. Those now worrying quite considerably because of what's going to be happening with tariffs against Canada and what Canada may be imposing. All those states that are quite close to the border, which also depend on manufacturing, are finding that their costs are going up and will be increasing. And that, of course, will have an impact on job numbers in the future as well, and on prices. So the anticipation, therefore, is that the worry about inflation, even though there are real concerns also about the whole supply chain in some areas, but the worry about inflation is still quite a substantial one and will perhaps be affecting what happens at the midterm.
Housing is also a major issue, with even rent prices spiking over 20%. Is the dream of home ownership now unattainable for an entire generation of young Americans?
Well, of course, this isn't happening just in the US, but it's happening in other places too. I mean, the real concern is the cost of borrowing for a house. And what's been going on, of course, you just look at the markets and see what the long-term interest rates are doing. If you look at Treasury bonds, 10 years, 30-year bonds, they have been rising quite significantly because, of course, there is concern about the overall debt of the US itself being at levels now that we haven't seen before. So the latest figures are pretty worrying. What it means is that the interest rates that people have to pay to buy a house, particularly, of course, given that for the young, the jobs market isn't particularly strong in the US, that is an inhibitor for house ownership. So that itself has an impact on sentiment. And that, again, will matter, I think, come the elections.
And as you mentioned, US inflation remains stubbornly above the central bank's 2% target. How must policymakers go about this?
Well, there is, of course, a meeting of central bankers at the end of the week, and that perhaps will give us some idea of what the intentions are. What we're finding is that, in general, central bankers are tightening a little bit. In the US, of course, it may not happen because right now there is such a concern about the level of interest rates, which are reflected in the bond market. And in fact, we've seen some intervention from the Treasury to try and buy back quite a lot of those bonds. And there is also a possibility of maybe quantitative easing happening again at the Fed in order to keep some of those rates down. But in reality, the pressure is probably going to be to raise rates, even though the forecasts are that they're not going to. If you add that to the uncertainty for households, businesses, and of course, in terms of what will happen to government debt overall, that doesn't look too good. But just one very quick thing. If you actually look at growth in the US economy, the likelihood is that the third quarter isn't going to look that bad at all. We might actually see an uptick from where we were in the previous quarter, because there still is quite a lot of activity out there, despite everything that we've been talking about this morning.
And Vicky, data shows that even middle-class Americans are drowning under record debt levels, yet they're being pushed into higher tax brackets without any real purchasing power. Are we witnessing the collapse of the traditional American middle class?
I wouldn't go that far. I mean, the thing to bear in mind is that if something that had always surprised us economists, when you look at the US overall, apart from various brief periods, maybe around COVID and so on, when the savings rate is high, in reality, the savings rate tends to be very low. Among households in the US, they borrow quite a lot of money, but we're going through a cycle where, of course, that cost is now quite high. The expectations of that interest rate coming down have not materialized yet, and that's where the worry is. How long that will last will depend on what happens to oil prices, what happens to inflation in the future, but we are perhaps at a critical point right now where things could turn either positive or negative. So, whether I can predict a collapse or not, it's pretty hard to say because of the geopolitics being so uncertain at present.
Vicky Pryce in London, thank you very much as always.